All right, welcome traders. I'm Dean Jenkins, and this is Follow Me Trades Market Prep session here on Sunday, June 28th. The goal today is to prepare for the upcoming week for the market and for trades, of course. All right, so I'm going to flip my camera on for just a moment. So, hey, I'll just say hello and real person here. And hopefully you can see me. Howdy, Dean Jenkins, Follow Me Trades. And I'm going to go ahead and turn it off for the presentation so it's not a distraction, but I did want to say hello. All right. So at Follow Me Trades, we use a framework for our trading. We call it the FMT Framework. So we look for, market context. What's going on? We create basically what I call a thesis for the market. And then based on that thesis, we scan the market to find really high probability opportunities. And then we look at individual charts and qualify them using our, time-tested, proven indicator set and setup criteria. Then we execute the trades, clear plan. We have a defined risk, position sizing. Then we manage the trades. We review how that went. Then we start over. So today, as a market prep, we're going to focus on the first three steps. So, here it is Sunday, market's not open. We're not going to take any trades today, but we're going to be ready for tomorrow's open. So we're going to look at the market context. We're going to scan the market. We're going to see if we can qualify some trades or at least get some that are ready that we should keep an eye on. So like I said, we develop a market thesis or, context and use a handful of tools to do that. So I'm showing the market dashboard that Follow Me Trades that we developed and we use. It shows, what's going on overall in the market. Of course, this is a snapshot at the close on Friday. Dow was down, S&P was down, NASDAQ was down, Russell was up, gold was up, oil was down. Top news that's we go out and scan and look for the top news. And then we have a sector heat map, which again is from Friday. And we have, this is really important, a relative strength dashboard. So the way this works is we've identified several and defined several sectors in the market. And, within each group, there's a bucket of stocks. You can see home builders. We got some ETFs and some individual, D.R. Horton, Lennar, Toll Brothers, right? These are obviously builders, right? We look at the 2-month return, the 1-month return, the 5-day return, and then what's the relative strength? Meaning compared to all sectors over the 5-day return, how much is this one up compared to the average, right? The overall index, right? So the 5-day return of the entire group, all the indexes combined was 0.93. Home builders was up 9.34, so that has a relative strength of 8.41. So we can see real quickly on this dashboard, what sectors are strong over the last 5 days. Now we know, through most of this year, AI has been the big deal, chips and stuff, and we call that the AI hardware infrastructure sector. And over the last couple of months it was up, but it's sliding, right? Chips are down, right? So there's some weakness in AI hardware, precious metal, financials, but the strength, the top three here are home builders, healthcare, cybersecurity. So that gives us a really good place to go look for our trades, rather than, well, everybody's in NVIDIA, right? Well, NVIDIA is pulling back. It's part of the infrastructure, AI infrastructure, right? So, um, and I take a quick look at CNBC, I look at the economic report calendar, and then develop what I call a market thesis, which is bring that all together. Okay, for the week of coming up, tomorrow, June 29th, what are the important things for us to keep in mind? Well, the S&P 500 is in an uptrend, but that trend is being tested, and I'll show the chart. Here's the S&P 500. Let's go ahead and drill in a little bit narrower time, right? And, when Iran invasion, or Epic Fury started, right, there was a pullback, but then it rocketed up to record highs from there. But what we see right now in the last couple of weeks is a lower high, new low, and Friday closed below the 50-day moving average, which is new. And we can see up here in um, we call this our trend strip here. What's going on. Hey, we got a bull market established, potentially a bear market emerging. The price oscillator just went negative, right? And we just went under the 50-day moving average. So if this continues down, that could signal a trend change in the S&P 500, the overall market. So that's worth absolutely keeping an eye on, a close eye on. And we know that money is moving, right? And the semiconductor weakness doesn't necessarily signal that the market is broken and the whole thing's going to fall apart. It suggests that capital is rotating into different areas. And we see the strength on the relative strength dashboard. So leadership's changing, right? Home builders, healthcare, cybersecurity, biotech. They are currently leading. AI infrastructure, energy, nuclear, precious metals are the weak sectors. Well, that's helpful information, right? And we got some economic reports coming this week, manufacturing data. Thursday, we got the employment reports, and then we got a short week, right? Friday, markets closed for the 4th of July holiday. And the new Fed chair, Kevin Marsh, will be speaking this week. Really, he spoke after the FOMC announcement, but this will be still new. People will be paying attention to what the new Fed chair says. So, it's important to say, hey, we don't predict the market, we prepare for it. We don't know exactly what's going to happen, but we can see a thesis of, hey, what's going on right now, and to be as prepared as we can. So today we want to identify where's the money moving, and we want to build a focused watch list, a trade plan for the upcoming week. That's what we're here to do today. And again, this is our market thesis. So let's jump right in. I'm going to go, no more slides. Let's get to the charts, right? So here's Thinkorswim. It's my trading platform that I'm using these days. And so we said that these strong sectors, the first strong sector was home builders. And what I've done is built some scans here in Thinkorswim, and so I've created a scan that we do some filtering. We only want highly liquid issues. We want, I don't mind low price, but we're not trading penny stocks and, a reasonable market cap. So, we want real companies. And then I've developed a custom scan algorithm that takes a look at all of our indicators and tries to find the setups that we're looking for here. And then I can apply it to these various defined sectors like home builders. So I can apply this scan and criteria to the home builders sector and go ahead and hit scan. And let's see what symbols come up, if any. And we can see, oh, we got quite a list. And this is we call it the trend label, the trend strip, right? It's how many of those indicators are lining up. So what's the strength of it? So these are a little bit weaker. These are the one is pretty good, two is even better, right? More better. So what we do here is we're going to go ahead and take a look at a handful of charts and see if there's anything, that looks like a good setup. So we got the whole market out there, 6,000 publicly traded companies. We've narrowed it down to two or three sectors, and then within those sectors, a handful of stocks. We're trying to be efficient and look again, where's the money moving? Where's the relative strength in the market? So let's look at BLDR. So we can go over to charts and see how this chart looks. Now, I'm not going to make this presentation all about, the indicators and setups we use. I'll make a pretty quick determination on these charts and, explaining all our indicators and our trading method to different, it's a different session. Today, we're just applying it, okay? So what I see here, real quick, builder's first source. So it's a hardware store, kind of like Home Depot, but more geared toward contractors. We can see real quickly it has an established bear trend. There's a bull trend forming. Price oscillator has gone positive. The Ichimoku cloud here just went positive, and we just crossed the 50-day moving average. Although the longer term, the 200 is still down and it's still in a death cross, which means the 50 is under the 200. So we got some signs of perhaps a bullish trend beginning. And we have some interesting stuff, right? Coming off the bottom, we got a high, higher low, new high. That's the definition of a trend change. We got positive momentum. We're above the 50. We're below the 200. And the thing that concerns me the most is there's a prior high coming up, right? So this went down, reversed. So that can be a resistance area. And so if I look at this chart and go, well, if I were to take this trade, I would say there's a risk of it stalling at this prior high. And so where would I put my stop? Well, my stops go under the prior low reversal. And if I were to enter here, this gives me kind of a poor reward to risk. Because here's the risk from the entry to the stop, and here's the reward from the entry to the potential failure point. So you can see this is bigger than this. It's two times bigger. So it's interesting. Looks like a new trend is beginning, but I'm not in. I'm not going to take this trade. And if it were to get above the 200 and look like it's going to continue, then we could come back and reevaluate it. But for today, no. So DCI is the next one. What do we see here? And go ahead, if you have some trades you're interested in, time permitting, I'll take a look at as many as I can. So go ahead and type those into the chat now and have those ready. Okay, DCI. Okay, I like this. And it had a huge run up. I'd call it huge from 60 bucks, almost doubled up to 115. And then it corrected, and now it looks like it's trying to get started again. It's below the 200. It's above the 50. It's struggling at the 200. We do have kind of a high, higher low. So, and we got some consolidation. So this is worth watching right about this price level. So if it gets above this area, above the 200, and is solidly starting um, an uptrend, that's worth watching. So I'm going to make a note of this one, DCI, and that's a watch list. Not ready yet. It's not qualified, but I'm going to keep an eye on it, right? If it does, of everything we put on a watch list, I'd say somewhere between 1 out of 5, 1 out of 10 ultimately end up qualifying, but that's how we identify opportunities. So let's look here at GRBK. Okay, so I like it. I'm going to zoom out. I want to see what the big picture on this was. Okay, so this has been, it's hovering around all-time highs in this time frame, and in fact being rejected at that high. So I like the power of this move, but it's being rejected here. So in terms of a short-term swing trade, nah. So that's why I zoomed out to see that. Um, I don't know. Did we look at linear? Let's look at linear. Okay. What's interesting, yeah, it's got this high. So high, higher, low. It actually wicked above this high. It's got this one coming up. Let's see if there's a better one. Okay. It's not bad, but linear whims. And as we narrowed down a list, but they're not all going to be great. It's got this high coming up. So we did identify one to watch, DCI, WIMS, LGIH. Let's go try that. Okay, this is the best one we've looked at so far today. And it's what I call a bottom feeder, right? It's come down, from 140 down to below 40. And now it's starting a new trend up. So that's of interest, I would think. It's gotten above this high, but it's got this one coming up. It's pretty close. Um, all the indicators are green. Um, they're all pretty new. And we just got a golden cross where the 50 crossed over the 200. So that's a really good sign. So what I'd like is for it to get above this. They hit this resistance area three times, one, two, three, and we're not very far away. So what we would do, we'll move this line just above that. We'll call it 72.40. If it gets above that line, that's going to qualify as a potentially pretty good trade. So that's LGIH, make a note. And yeah, if it does, we'll come back, look at it, and maybe take that trade. Let's look at one more in this sector, and then we'll switch to the others that came up here. So that was LGIH, LPX, Louisiana Pacific, LPX. Well, I said before that LGIH was the best chart we've looked at so far. Um, Now we have a new one, LPX. This is the best chart we've looked at so far today. Why do I like it? Because it's got, it's had a good correction, come down off the lows, good correction, and now it's starting back up, and it's showing real proof of a new trend beginning. High, higher, low, high, higher, low, high. Positive oscillator, green cloud, above the 50, above the 200. We're still in a death cross, but uh, look at the last resistance point, way up here. So if we were to enter this today at Friday's close, and our stop would be at the prior low. Remember, I talked before about reward to risk. I think on the first one we looked at. This is the opposite. So this is our risk from the entry to the stop. This is our reward entry to the target, right? This is looks like about almost 3 to 1. It's exactly what we want. So it looks like earnings are projected to be 8.5. So we got over a month. So this looks good. So tomorrow morning, we'll have our live session and we'll come back to look at this one. And if it's holding above the 200 here and still looks like this, um, good shot that we will take that. So LPX, um, and uh, we will look at that first thing tomorrow morning. And actually, that's a good note. We're not having a live session tomorrow. We take the week of the 4th off, but we will still look at it during the live market. And if it still looks good, we'll send an alert to the subscribers. Yeah, we take 4th of July week off for the live sessions, but we still are on the job. Okay, so we found two to watch and one that looks like it might be ready to go in the home builder sector. So let's go back to our other sector here. We said healthcare is has some real strength. So let's scan in that sector. using the same criteria, but we're just going to go to a different um, sector and run our scan and see what comes up here. DHR, Merck, Baxter. Okay, let's go DHR. So, zoom out. See, it's been beaten down the last few months. You know, here's the high, and then it recovered, went down again. Looks like it's coming up to some resistance. We've got the prior high here. We've got the 200 here. It's made quite a run, and the stop, I always said it's the prior low, so that's going to be a very wide stop. So it's got a nice trend, but it's going to have to develop a little bit further for my criteria. So that's all right. See what else we got. Merck. Okay, Merck has broken out. Let's just go big view. Okay, big correction. This is actually a reasonable, very simple version of Elliott wave. So I'll show what that would look like. So we're just looking for an impulsive move, a correction, and then a continuation move. And that's exactly what this looks like. And so we use the Fibonacci retracement tool from the low to the high before the correction. We got a correction. And then we use the Fibonacci extension tool to predict where that extension has a probability of going, not a certainty, it's probability. It's these green lines. This is the target zone. We can put a price in the middle about 150. So this looks really, really good. It had the correction and now it's starting up. High, higher, low, new high. Indicators are all green. An established bull trend, right? It's got a nice target. Let's see what the reward to risk would look like. Stop, entry, target. So we're at about 1 to 1. So what we would like and what might happen is um, we've had, 4 or 5 straight days in a row up. Quite often after that, like here, we'll see a pullback. Right? See a pullback. So if we get a pullback and then it reverses, that would be a phenomenal entry. So we'll watch it. So this is going to be Merck as a watch. Okay. FT says should benefit of housing ETFs keep going up. WY. We'll look at that in a second. So you're probably getting a sense of the process here, what we're doing. Um, Resorted on me. Come on. We looked at Merck. Hey, Agilent. Gap up on earnings right here, then a pullback heading up. Got a big high, previous high coming up. Um, eh, Baxter. Right at that prior high. It's a nice you can see it's been beaten down, high, higher, low, high, higher, low. Um it hasn't got a golden cross yet, but it's close. So that's worth watching if it can break above that prior high, and then the reward to risk is good. So let's put Baxter on the watch list. Okay. So that gives us five candidates right now. We've got DCI, LGIH, LPX, Merck, Baxter. LPX could be a go. And Merck looks good if we can get a pullback. The others were waiting for a trigger level on them. So um, I think that's enough to keep us busy coming up. And so we use this exact same process week after week. And if you look at our open trades here, we found Moderna, same way. And our stop here is at 57.50. We entered it at this blue line, which is 61.55. It's currently at 62 or 67.27 in this target zone, and we're letting it ride. And this one is in um, uh, 7.88% profit on the shares. Now, in our trading, we go for asymmetry. So we have an option strategy that we use so that when these things win, they win really big. And when they lose comparatively smaller. So the option on Moderna right now, the underlying is up 7.88%. The option is up 65%. So that's a pretty good deal. So this trade, and it's got room to run. So we use this exact same process. You know, healthcare was some strength. Moderna came up on that scan list. And a couple of weeks ago, we found fuel cell, and it's off to the races as well. It's doing really, really well. 22% on Friday. That's not bad, eh? Let me look at a couple symbols you guys typed in. So Zachary ALAB. So what we got here. I don't know that I've heard of this. Astera Labs. Okay. Um, Big volume, 6.5 million. It's kind of expensive. 391 close on Friday. Well, it's a runner, isn't it? For this year, it's gone from 100 to well, it hit 400. Well, that's amazing. Um, but it's losing momentum. If we see the oscillator, it's coming down here. Um, and in my trading style, I don't chase mature trends, and that's a mature trend. So I would be interested in this if it corrects, from this move. If it corrects down into this Fibonacci retracement region and then starts again, that could be a continuation. So that's a ways out. I like it, but not now, right? So I'm not chasing this up here at a 4x run. So yeah, you're welcome. Um, all right. FT says WY. Housing, I think you said how, oh, Warehouser. Okay. Warehouser REIT. Um, it's pretty choppy, isn't it? It has broken above here. We got this coming up. It's almost like it operates in a channel, although it just broke out. All right, here's the lower end. If we're just looking at this region, here's the higher end, right? So you can see it's almost like a game of Pong, right? Ba-doop, ba-doop, ba-doop. And it did wick out, but it's reversing now. That's there's a way to trade channels like that. But I try to trade impulsive moves. I found them to be better. So that maybe not is not the one for me right now. How about Van BZH housing sector? Let's see. Beezer Homes. Okay, now they're in a tear. They had a good day on Friday, 6%. Look at that price bar. Broke above here. Um, Put in a high here, had a correction, went kind of sideways, a little bit choppy. Now it's breaking out. So, and it Friday had 500,000 shares. So that if you saw the filter on my scan, I had it set at least 750,000 shares per day. I want that kind of liquidity. This is kind of on that low end. It's not a bad trend. Right after earnings, it had a gap up. It's been an uptrend, broke above here. Um, Part of the problem is There's no impulsive move to use Fibonacci extensions. There's no real, the real prior high was so long ago, it may not be relevant. How far would it go? It's hard to tell. So given its low liquidity and an unclear target, yeah, I'm going to pass on that one. Bill, UNH in the healthcare sector. Well, they've moved on from, the events back here. Unfortunate events. You guys probably know what I'm talking about. And starting to head up. It's a nice breakout. Um, so yeah, very nice. It's kind of expensive, 427. Um, has earnings coming up in a couple weeks, which would be okay. In terms of a target, the only thing that's clear here would be this gap. Sometimes those gaps. Um, stop would be here, entry here. Obviously, old analysis here. So reward to risk is good. They got through dividends, didn't pull back. It's not a bad trend. Now you're joining an existing trend, but it's not, exceptionally mature. So yeah, that's not too bad. I think we have better ones, but it's not bad, Bill. I'm not going to take it. I like these other ones we put on our list more, but yeah, it's in an uptrend, and you could participate, and the reward to risk on it looks pretty good to me. Okay, anybody have any questions before we kind of press on here? And again, we came up with five symbols. Um, four to watch, and one, if it looks good tomorrow at the open, then I'm going to go ahead and take that trade and publish it to the subscribers. All right, I don't see anything else coming in. So yeah, I talked a little bit about asymmetry in our trades, and I want to come back to that topic here. Do I trade biotech? Yeah, absolutely. That's one of the sectors that we have on our sector list. Right now it's one, two, three, four, so it's not bad. It's number four on our relative strength dashboard. So I focused on the top two today. But yeah, if it heads up, in fact, it was strong, and that's where we got the Moderna trade was biotech. All right. So I talked about asymmetry. Let's dig into that a little bit more. So here's our trade results year to date. So I talked about this framework we use, market thesis, finding the sectors, drilling in, scanning for trades, looking at individual charts, putting them on a watch list, qualifying them, taking the trades. So here's this year to date, we've taken 55 trades total, which is about two a week, right? We're halfway through the year, so we're not going nuts. Um, the win rate is 42%. So you may look at that and go, what? That's, that's not really that good. Um, it actually is because what's more important than the win ratio is the payout ratio, which is 2.38 to 1. So that means our average winner is more than double the size of our average loser. And you can see this, this is uh, a, a bar chart of our biggest losers and then our biggest winners. And so because we use risk control, the loss is always capped. So this is based on taking $2,000 trade, putting $2,000 into option contracts. So the most you can ever lose is $2,000, right? We had a couple. We got very, very close, right? A handful of small losers, handful of small winners. And then here's the asymmetry, right? Because some of these winners get exponentially large when using our option strategy. So that's why the average winner is 2.38 times the average loser. And net P&L over 55 trades at a 42% win rate and a 2.38% or ratio, 2.38 to 1 payout ratio, net P&L 45 grand. Um, and the $2,000 per trade is based on 100K account, so you can scale that up or down halfway through the year. So that we're very pleased with those results, and they are pretty consistent. So if you liked what you saw today, the overall framework, how we operate, and you'd like to continue and participate in that. I know we got a couple subscribers here watching. That's great. Glad to have you. If you're not currently a subscriber and you're interested, or if you previously were and you want to come back, and you can see we've refined things a bit. We've developed some tools and again refined the um, overall framework, right, and articulated it a little more clearly. So if you'd like to continue with us, every trading day at Follow Me Trades, we continue working, right? We monitor the market, we scan for high quality trade candidates, we publish qualified trade alerts to our subscribers, and then we provide ongoing trade management updates. So all of our trades we publish on this trade dashboard. And you can see there's one, two, three, four current open trades. CAH underwater just a little, Etsy less than a percent, GE's emerging in some nice profit, and Moderna 7.88, about a 65% profit on the option. And we published the watch list. I talked about that, right? We got some new symbols, right? But we put these on the watch list, right? And then it says, hey, has the trigger been hit yet? No, yes. And then here's the details, right? When did we start looking at it? What's the trigger price? Just because it triggers doesn't mean we're going to automatically take it. We're going to go look at the chart and review it and see if it still makes sense. But this is our way of keeping track of good trade candidates. So this is what we do. And then if you're a subscriber member, this is what you get. You get access to the trade dashboard watch list. You get alerts when there's a new trade, entry, stop, target. You get the option contract, and you get trade management updates. Um, so, like on, if I go back to Moderna, right? We look here at the notes and history, right? We took a new entry on June 24th. On the 26th, we took half the profit on this trade, and other ones will trail the stop, will take profit. Each one of those moves, there's an alert that the members get. So, we step through it step by step, manage the trade, and we send alerts for new trades, for um, updates to the trades as we manage them. All right, we have a live market session that's available. It's not mandatory. You'll get the alerts, you get the dashboard, all that stuff, um, always. But we have a live session you're invited to. If you can't make the time, replay is available. Um, Always have complete customer support, including a one-on-one if you would like to have that. And, membership in the community. Quite often, um, folks bring ideas, and in our live sessions, talk to each other and offer, insights, tips, and stuff like that. So that's it's a great community, and we like it, and people seem to be happy. So that's a good thing. And so what's this cost? Um, Simple pricing. It's 97 bucks a month for an ongoing subscription. You can try it for your first 30 days for 37 bucks, and that's a 30-day money back guarantee. So you try it for 30 days. If you're happy, you like it, you want to keep going, it renews at 97 bucks a month. That's month to month, no contract. You can uh, cancel it any time. And I put the link into the chat there. There's also a QR code on the screen you can scan here, right? So yeah, real simple. 37 for the first 30 days, money back guarantee during that period, no questions asked. After that, 97 bucks a month, no long-term commitments. And Once you're in the 97 per month, we'll offer you an annual price, which is about a 40% discount. If you'd like to, it's like, yeah, this is good. I want to keep going. We'll offer you an annual price, right, where you can get a discount to pay for the year. Okay, that's it. Um, See if there's any questions. And I'm going to go ahead and stop the recording now because now I'm just going to see if anybody has any questions about the transactions or anything. Okay. Hey, thank you so much for attending. I hope you found it valuable. I enjoyed being here and hey, have a happy fourth and we'll see you down the road. All right.